Hello and good evening, and welcome to SCOTONOMICS episode 12. Now, every 2 weeks, but soon we might be moving to every week on YouTube, we look at the details and get right stuck into what makes a modern economy. As ever, I'm joined by my co host, Kairin van Sweden.
Hi, William. How are you?
I'm not too bad. It's nice to see you again. Kieran and I have just done 2 back-to-back recordings for Scotonomics just a couple of hours ago. So it's like we've spent the whole day together, despite us being, nearly 1,000 kilometres apart. What caught your What caught your eye this week?
Well, of course, the big thing today, of course, William, is the budget. Rishi Sunak has subsidised air travel only a few days before COP26, with apparently the intent of strengthening the union. Also, he's announced 21 billion on roads, freezing fuel duty. And I think Ross Greer is right is when he says that the Tories are a clear and present danger to our planet. I read an interview yesterday as well with Noam Chomsky, and he said pretty much the same thing about the US Republicans in an interview he did for Common Dreams with Stan Cox. There is also the promise of devolution circumvention, unfortunately, as well.
Yeah, not a great day all round, was it? But I found a little bit of green shoots. So it was the first meeting of the Economic Advisory Council that has been set up at the Scottish Government. Now, I'm not a huge fan of this because it's looking at 10 years ahead and it's not looking at Scotland as an independent nation. So I've got my issues with it. However, it's really good that the Scottish Government is listening to these independent voices, and some people on the panel I've got a lot of respect for. But what I wanted to draw your attention to, Kieran, because you and I spoke about this just last week, was this kind of sea change in the language of our First Minister, Nicola Sturgeon, when she's speaking about the environment. And the Scottish Government tweet that they put out today, it says, picture of Nicola Sturgeon, and it says, as we emerge from the pandemic, we must work together to seize Scotland's potential and build an economy for everyone by delivering greater, greener and fairer prosperity. And the reason that I'm really optimistic about this is because it doesn't say growth anywhere. And this is almost like the first time I've seen something from the Scottish Government that's talked about our economy that doesn't say growth. And I think that's huge. I really hope it's not a mistake that someone's made, but it's actually looking towards this idea of a much more well-being economy. So I was thrilled when I saw that, and it kind of just it diluted a little bit of all that bad news that was coming from the budget. So a little bit of, hopefully, a little bit of green shoots for us to look forward to. Our episode tonight is an absolute cracker. So good that we got some coverage in the National for it. Do you want to tell us a little bit about Claudia and introduce us into the video?
Yeah, I'd be delighted. So, Dr. Claudia Sahm is an American economist who was formerly Director of Macroeconomic Policy at the Washington Center for Equitable Growth and a Section Chief also at the Board of Governors of the Federal Reserve. Dr. Sahm specialises in macroeconomics and is a household finances rather. She's best known for the SAM rule, which is a Federal Reserve economic data indicator for identifying recessions in real time. So, without further ado, let us introduce you to Dr. Claudia Sahm. Hi, Claudia, and thanks for coming on to Scotonomics. I read a recent article that you had spoken to someone at Politico, and at the bottom of the article, you said something that really resonated with me, and that was that you would like everyone to understand how the Fed works, and I would like everyone to understand how the Bank of England works as well. So, could you maybe talk about why you feel that way?
Right. So, first of all, thank you for having me on. I'm very excited to be here. I worked at the Federal Reserve for over a decade. I started straight from my PhD in the summer of 2007. So, my first year was an absolute birth by fire. I was one of the points on consumer spending. I paid a lot of attention what was happening to families as they were losing their homes, their retirement savings. it it was hard. I mean, it was hard in 2008 in the crisis and the recession, and frankly, it was the recovery, the very slow, very painful recovery, the Fed not doing enough, Congress walking away, even throwing it into reverse and doing austerity not too far into the recession or the recovery. That was really hard. And in the time I was at the Fed, I came to understand what the Fed can do, what the Fed can't do, but how important its role is in the economy. And I also saw how hard it is for people to understand what the Fed does. It's not a beloved institution in the United States. And frankly, that's partly the Fed's fault. It's not transparent, it's not easy to understand. And I'm just wired to love talking to people. This is not part of my economics training, it's just part of my upbringing. And so, one of my big missions, particularly after I left the Fed, is to bring the Fed to the people and help communicate. I think the Fed's made a lot of progress. I think Jay Powell is a great communicator, but I am here to assist them in that kind of pushing it forward.
So how do you envisage that project? How will you go about doing that?
Well, I've been very fortunate to have many different platforms where I can share what I know about the Fed. And some of those are platforms like this, doing podcasts for more general audiences. I do a lot of press, and there's a news organization with National Public Radio in the United States. And the journalist I talk to, she'll push me to be like, can you come up with a metaphor? Right. And one of the last interviews I did with her was on what's referred to as tapering. So, the Federal Reserve in the United States has been buying assets to help push interest rates down. They've been buying US Treasuries, mortgage backed securities. There's a big debate about when they should slow those purchases, when they should stop those purchases. So, they just don't put as much downward pressure on interest rates, which should happen as the economy recovers. But there's a big debate among the Federal Open Market Committee as to when. So Marcia asked me, can you give a metaphor to people who don't follow the Fed? So that afternoon, I was taking my son to a water park. Right, this was going to be our outing, summer outing, and I told her, I said, "Well, tapering's kind of like a water slide, right? The more water the Fed puts on the slide, like the more you're purchasing the assets, the faster you're going to go down the slide. Once you get close to the bottom, you don't need as much water. You got some momentum going. If they turn the water off too soon and you are still halfway up the slide, it will be a very painful ride to the finish line." So journalists absolutely love this, like, because it's just so hard. Like, the Fed, you talk about taper. What is tapering? Right. So I try really hard. I won't, sit, that's not a perfect metaphor. And but it's really important for me to be in places where I have to figure out how to convey it. That said, I also talk in places where it's very technical and I don't have to explain tapering. But I try to respect the audience, and I want to bring more people into the conversation about what the Fed is doing.
So in Scotland at the moment, we have a campaign. We've had a campaign for a long time, but we had a referendum in 2014 to become an independent country.
Mhm.
There is some misunderstanding about the idea of having our own uh, central bank and currency. What are your thoughts on trying to be an independent country without your own central bank and your own currency?
Right. It's tough. There are many trade-offs in economic policy. The Federal Reserve is just one, or I'm sorry, monetary policy in general is just one piece of the puzzle. In the monetary policy space, it can be very difficult, and this is absolutely something the European Union has struggled with. Larger country, like United Kingdom, where you have or anytime you have a group of countries that have similar economies, they might be smaller economies. I mean, the United States is the biggest one, right? And so it becomes difficult to have one central bank that is making a decision about interest rates. Sometimes it's regulatory policy too, but interest rates in particular. And countries are at different places. I think, and we see this in the United States too, right? We have individual states in the country. Different places have different industrial bases. I think this becomes most prominent in a recovery. In a recession, all the ships tend to sink together, right? And so then monetary policy, it's not that tough, right? Like you've got to like just get those interest rates down. You've got to do what you can to get the recession stopped, make it not as severe as it could be. Recoveries are not as simple, right? In a recession, different industries will come out sooner, different countries, and for all kinds of reasons that that a central bank has no control over. And so then it becomes really tough. How do you balance the effects in one place or another? I think uh, when and we're seeing it right now. Central banks across the world, some are starting to tighten in terms of like they're trying to get interest rates actually to come back up, and some aren't. Like the Federal Reserve. And that just shows how hard it is and how varied, and they might all be making the right decision because it's a decision about their particular country or countries that they are making
Mm.
decisions for. So it's really hard. There are benefits to having your own central bank. We also know that in fiscal and in trade, it there are real benefits to not going it alone.
To chip in with
Yep.
a playground metaphor,
Okay.
and take up Claudia's metaphor challenge.
Mhm.
But I kind of saw that as the central bank. It's like a seesaw. It's trying to balance different things within the economy, and a central bank, for example, the Bank of England, is balancing investment in Northern England with prices of mortgages round about, let's say London, and
Mhm.
it's continually doing these things. And in Scotland, we just wonder what concern is there for these 5 million people, in this central bank, this bank that's looking after 60 million, and that's kind of the concern. And
Mhm.
one little thing I wanted to get your specific opinion on was,
Mhm.
part of the proposed post independence settlement is for an
Mhm.
independent Scotland to still have the Bank of England and still use sterling for a period probably up to 10 years. So Scotland
Mhm.
would be independent in that
Mhm.
sense, but would be having the monetary policy controlled by the Bank of England. Any thoughts on how, if that would work? Is that unique? Has anyone else got any kind of arrangement like that you're aware of?
How is what right now and for the next 10 years differ from what's happening, say, in the European Union, where you have the European Central Bank?
Scotland wouldn't have any influence over the Bank of England. Whereas if we were part
Oh,
of the European Union, we would be one of the members who had, even if it's kind of
I
tacit
see.
influence, but we would effectively be giving our monetary policy to a foreign country.
I see. Uh, well, there's two things I'll say. Uh, One is transitions are extremely important, right? Financial markets can be kind of jumpy, right? And I mean, this is why you see central banks, particularly the Federal Reserve, is so like trying to give what they call forward guidance, like tell you where we're going. So it makes sense if the goal eventually is to have one's own currency, to have a central bank that's overseeing, like for that particular country, then don't do it overnight, right? Like make sure you have the transition. Now, that does mean in the transition, there are unique challenges, right? And I mean, frankly, even like independence doesn't um, erase all of the connections across economies, right? Like the United States, in the recovery from the Great Recession, there was a period where Europe was uh, more aggressively pursuing austerity, raising rates, pulling back. And there was a very frightening time where it looked like Europe and the troubles it was having could pull the global economies back into a recession. So, in many ways, we are all in this together. We see this now with COVID, a lot of the problems, the shortages, the energy, like we're all doing it together. So, it is tough to, hand over the keys even for a short period of time. And yet, I think it would be shocking if if the Bank of England weren't taking a broad view of the regional economies. Now, in terms of something that might be comparable and just underscores that we're all in this together, smaller countries, ones that may even have or do even have their own central banks, they're very affected by what's happening in the United States, what's happening in Europe, right? So larger countries, when they start moving their interest rates, the dollar is the global currency, right? So I think there are many benefits to autonomy. It can be tailored to a particular country's circumstances. So I see the argument for it, and yet we are not alone economically in this endeavor, nor should we want to be, right? So I think, transitions are important. There are definitely upsides, but it's not in a global economy. There are a lot of interconnections, particularly when we're countries physically close together.
Yeah, I mean, we look to the north, and we see Finland, Iceland, which is 350,000 people with its own central bank, and Finland and Norway,
Norway,
and in
Sweden.
Norway, yeah,
Yeah.
we see those similar countries that have that, and that's where we're looking. I think
Yeah.
one of the concerns is that you mentioned the financial markets being quite jumpy. And without a shadow of doubt, the paper that's been written that backs up the Scottish Government's approach is called the Sustainable Growth Commission, and its audience is the financial services industry. And
Mhm.
it's wanting to say to them, everything's fine, there'll be a smooth transition over a period of time. But to use
Mhm.
the seesaw again, the flip side of that is potential austerity and not having the fiscal powers to be able to tackle the huge inequality and issues that currently exist in Scotland. And Kieran and I both feel that seesaw is not quite balanced, and giving over that control to the central bank for such a long period of time does seem to be overly supportive of the financial services industry.
Yeah, no, and I think your point about connecting what central banks do to what fiscal authorities can and can't do, right? Because when a government borrows, they borrow at an interest rate. The central bank has a role in not setting interest rates. No central bank, not the Fed or not any bank, decides we're going to have this rate, but they can, in terms of a rate that goes to consumers, they can do a lot to say what rate banks will borrow from the central bank, but they can't tell people how to pass that on to businesses investing consumers, and that has a lot to do with how the economy is growing, how taxes come in, right? Like this does go back and affect what fiscal policy can do. I think what's interesting is we've seen in the past year a big fiscal response. If you think across various developed countries that had the ability to go out as a government and borrow in the crisis, it was on a scale that has not been seen in generations. I mean, this was like fighting a war. COVID was treated that way. In the United States, within a year, the Congress allocated almost $5 trillion. We have a $20 trillion economy, but that's a lot of money within a year. I firmly believe that was the right thing to do. Not even a decade before, if you had told an economist that's what we were going to do, and we were going to take the level of federal debt to GDP to the where we are now, they would have run screaming. I mean, that was a big part of the austerity push. So now we're in this place, and I think markets wonder this too. I mean, they're the ones that are going to lend in the end. Is there like what is that limit? What is that trade-off between letting giving countries what they need in terms of borrowing to invest in infrastructure, long-term growth, fighting inequality? Like as market participants, should we make that bet? And right now, interest rates have stayed low. They've risen some recently, but I mean, these are still really low interest rates. So, in some ways, you can look at the market and say they're begging governments to borrow. Now, not every country in the world has that capacity, and particularly smaller emerging markets developing it, like this is not their
Mm.
path. But much of Europe, like if you can make the case for the structural reforms or the growth, sorry, that's kind of a loaded term, structural reforms. But if you can make a case for programs that are fighting growth, if it can get through the legislative process in a country, markets largely look like they're going to go along and help with those investments. Now, the politics of this is like a totally different ball game than the financial markets, but there is this really important interplay between central banks and the effects they're having on interest rates and the space that governments have to borrow. And I mean, I have argued that we are facing a sea change in both fiscal and monetary policy. Federal Reserve, as one example, has adopted a new framework, right? So this isn't just about keeping interest rates low for longer, which other countries have, joined in lowering interest rates in the crisis. The Fed changed its framework to, one way of thinking about it is they've elevated the employment side of their mandate to be on par with their inflation side. They put some guardrails in place with this average inflation targeting that should make them focus on what we have seen for inflation, to some extent give them the ability to quote unquote make up for low periods of inflation. So in 2020 we had a lot going on that was way more painful, but inflation was really low, right? The demand wasn't there. And so the inflation in 2021 has been high, high relative to anything we've seen for decades. To a point, the Federal Reserve had said we will tolerate that to the extent it averages out low inflation last year. And frankly, for years, the Fed had been a little bit under what it wanted to see. So that's a big change. If they had their old framework, it's really hard to imagine how they wouldn't have already started pulling back on the pushing down interest rates. And then they added on their employment side that they want to see broad-based and inclusive employment. So even though we never achieved either side of the dual mandate after the Great Recession, they've raised the bar on the employment side. So we'll see. They're being tested. I think the Fed is well on its way to its sea change. I think what we've already seen this year really shows that they are committed to at least seeing through this test of their framework. They will pivot. They are soon going to be taking some of the downward pressure off interest rates as the recovery is progressing. Um, they're definitely something to watch. Now, the fiscal policy sea change, and this is part of what I talked about, the big deficit spending, it's moving, but it is moving increasingly slow, because now we've moved into the phase of infrastructure package, which looked like it was to the finish line, and yet it is not. And so that's about $1 trillion in total. About half of that is new spending, and that had bipartisan support. So we'll see if that makes it through. I mean, that one will pass. It's just not clear if it's going to pass with everybody holding hands. And then the big debate right now is on the investments in people, government, social programs, safety net, climate change, right? And that is a bill that it's going to be a Democratic led bill. It's referred to as a reconciliation package for very wonky reasons we don't need to get into, but you can think of it as the investing in people part of President Biden's agenda. And it's going to be tough to get that one to the finish line. There's a huge debate about how big the package should be. Frankly, I think I understand why that's happening. It's a very historical artifact of how Congress works, and yet it's so misguided because you can spend $3 trillion really well, you can spend $1 trillion really badly, right? So it's not about the size, it's about what you do. And yet we are spending a lot of time in the United States wrangling over the size. And the last thing I'd say is, while we are at a sea change and where fiscal policy could be very active in long-term growth in a way that they haven't been for decades, this is the chance, right? Like the clock is running out on having a unified government, having Democrats and, with control of the House, the Senate, and the presidency. So I'm not holding my breath. Instead, I'm working very hard to push for good policies, but it's really in the hands of the politicians. Like the politics are looming large.
But at least you've got a clock that's ticking. Here in the UK, no one has even pressed the timer yet,
Mm,
so we're looking across to what's happening in the States and with Biden and seeing that there's some momentum. There's just
mhm.
nothing like that here. Claudia, you've been looking at some green fiscal policy research. It's not out yet. I don't think it's complete yet. Would you like to give us a little backstage look at what you're covering with that?
Right. And to be clear, I'm trying, one of the things that I do as an economist is try to translate and bring research that a lot of people are doing to a broader audience. Uh, the in the United States, it has been politically fraught to think about how do we fight climate change. I mean, we are a country that people, including politicians, don't all agree that we have a climate change crisis. So this has absolutely made it difficult to make any progress in terms of pursuing agendas. One of the uh, discussions that got me, just given my background, particularly motivated to talk more and trying to understand better the climate change economic policy, was that recently climate change got pointed at the Fed, right? That there's President Biden will soon make an appointment for the chair of the Federal Reserve, and there were some uh, politicians, some Democrats, and other activist groups that had said that Jay Powell, had not done enough in his tenure as the chair in terms of the Fed fighting climate change, right? And had been very silent publicly in these efforts until the election and Democrats went into power. And I bristled at the idea that the Fed should be like that should be so important in deciding who leads the Fed. And I also, the other alarm that it set off for me was just this idea that the Fed can do so much, right? Like the Fed had a lot of pressure on it about its maximum employment mandate, that, we have racial inequities in the US economy. And absolutely, the Fed should pursue its mandate. And I mean, this is why they emphasize the broad based and inclusive framework. But if you think that the Federal Reserve using interest rates is going to close the black white unemployment rate gap in the United States, that's not going to happen. They don't have the tools to do that. Congress has the tools.
Absolutely.
Congress has the tools to fight climate change. The Fed can assist. The Fed should not be leading. It is not an elected body of officials. We have those sitting down the street in terms of the House and the Senate. And so I think it's important. The Fed has things it can do. They're much more technical. It's doing research, running some of the stress tests on banks to see if they're ready, particular insurers, for um, climate disasters, which have become more regular and more severe in the United States. So the Fed has things it can do. If Congress tells it to do more, the Fed is very competent. It will do more. In thinking about green fiscal policy, and I think why I haven't done as much writing is I'm still, being a student of what is out there in terms of the economic space. And one area that I think is really important is that when Congress moves into this space, that they are very aware of the effects it will have on workers and communities that are very intensive in our traditional energy sectors. The parallel that one would make potentially is when the United States embarked on its free trade agenda. So the NAFTA, which opened up the trade for, well, just really opened up trade in general, but particularly with Mexico and Canada. And there's a lot of research. I mean, this was decades ago, and there's a lot of research, and as it opened up to China, it gets referred to as the China shock, right? There are parts of the country where the manufacturing base took a big hit, and that's caused a lot of economic distress and, frankly, a lot of sentiment among workers and communities that they had just been left behind. right? That Congress walked away. Um, we don't need we know why that happened. Like there were lots of people that benefited from lower prices. We didn't step in and help those workers who were hurt like a lot in the communities. That's a tough it's hard to know how to do that right, but that has to be so high on the agenda when we think about the climate change and really get into the details of what kind of skills are needed, what kind of retraining. So it's like I know what we or I feel like there's a clear uh, concern. But then the question, and this is what I do as an economic policy advisor. I don't just tell you, hey, let's worry about it. I try to come in and say, here's research, here's study, here's what we could do. And it's tough because I've said I don't think the Fed can do it. Congress has to, but because we've had trouble doing these kind of big agendas in the past using trade as a parallel. And then on top of it, climate is such a politicized minefield. So,
Yeah, I mean, you bring up an important point that actually Paul Tucker, who used to work at the Bank of England, pointed out in an interview with Mark Blythe, which is that this is also this has occurred in the UK as well, where to a certain extent it's almost if the politicians expect the people that work at the central banks to solve their political problems. You know, the politicians are voted in to solve the problems. The bank is really merely a tool of the politicians. Yes, absolutely, they should be taking advice from economists. Absolutely, they should. But you know, fundamentally, we elect people in to take responsibility.
the Fed, they are highly competent. They have training, not just in economics, they do regulatory, legal work, and yet they're not elected officials. The more that we ask them to do, but I mean, Congress made the Fed, Congress can take the Fed away. This trying to push on the Fed to do things, but without new legislation, without new orders from Congress as a whole, that I don't want to see the like there are big problems in the world. They need to be solved. The Fed could help, but I don't want to see the Fed move into spaces where Congress hasn't told it specifically to be working because that's not democratic, right? Like it is on our elected officials to get it done. Now, that's not encouraging, but that's what we got. That's what a democracy is. I think right now with the Congress is struggling not just with the politics, but they're out of practice with these big fiscal spending investment type projects. I mean, the United States, we joke through, the 4 years of the Trump presidency. Next week was going to be infrastructure week. That was the next week we're going to invest in the bridges and roads. And even that package, which is I mean, that really has a lot of support in terms of both sides of Congress, like getting that done, it never rose to top of the list. It never got across the finish line. That just shows how hard it is to get more government spending out the door. Um,
Yeah.
but that's the way we do it, right? Like that is the path forward. And hopefully the COVID crisis, the one very thin silver lining is that it amplified the inequities, the structural problems in the US economy, I think in a lot of economies before COVID. And so it is hard to deny right now that we have big investments we need to make. Knowing we need to do it is different than getting it done, but we are having conversations in Washington D.C. that were just like unfathomable
Mhm.
even a year before COVID. Yeah, so the devil's in the detail, right? Like to get things across the finish line. I mean, members of Congress need to go back to their district and be able to say, "Hey, I got this for you." Right? So, I think and that's the way this works. They have their projects lined up and ready to go. The Most of the debate is focused on the big programs, right? So as examples, the some of the big programs that are being talked about in this reconciliation bill are a new child tax credit, or extending one that was put in place during in the American Rescue Plan, the package that passed earlier this year. So extending that, and that's just giving cash to families who have children, young children. There's talk about creating a paid family leave program in the United States. I mean, a lot of these programs are one that to Europe, it's like, I can't believe you all don't have this, but the United States has had a very different approach to its
Yeah.
safety net in the past. And that's where the climate change is at. There's legislation to expand education for public education for preschool, which is the year before, it's like a 4-year-old kind of education, and free community college. So those are just some, and prescription drugs for seniors, like lowering those prices. So there are a whole assortment of big
Mhm.
programs that people are talking about, and then there's always going to be a little bit left over at the end, like hundreds of billions left over at the end to make sure that different Congress people can
Right.
get something to take back. But I think one of the pieces that is really interesting in terms of how fiscal policy is happening is how much control Congress tries to exercise over what people do with it. Right. This was part of the discussion earlier about state and local governments. They were one of the last ones to get any kind of funding during the crisis because they just give money, right? So there are going to be some states that do things with the money Democrats don't like, and some states that do something the Republicans don't, right? It's like, giving over the discretion to do what you want to do. Now, in a crisis, sometimes they'll like make peace with that because it's just, Congress can't legislate all the, exactly what they want states to do. A big, we've seen that debate shift, and it's really interesting debate in terms of this child tax credit because it's just a transfer of money. In the past in the United States, the existing before COVID child tax credit and some of the other programs like the earned income tax credit, they only went to people who worked. Like they were primarily for lower wage workers, but you had to work. So there were these work requirements. Currently, this new child tax credit has no work requirement. By all estimates, it is getting to children who live in poverty, right? And particularly deep poverty in the United States, which is hard. Like deep poverty means you don't have a lot of income. So there is a big discussion, even amongst Democrats, of, well, we should have work requirements because we want people to work. It's good for the kids if parents work. And then there's a lot of discussion about what the phase outs are. How many people really deserve this? And what happens is if the income require, like where it starts phasing out happens too soon, that means that lower wage workers end up having really high tax rates because every hour they work, they're losing more of these benefits. So there's this really interesting debate happening between the old way of Congress, basically telling people you have to work and we're going to decide who's deserving, to we're just going to give you money and you're going to figure out what you and your family need. If that new child tax credit moves through in this just cash and give it to lower, like without work, that's a really big change, and it's really Congress stepping away and saying, hey, people, do what you need to do. I don't know how that one's going to end up. I'm personally very in favor of the cash transfers. I just think the government, it's it just should get out of people's lives in that respect. I mean, let the parents raise their kids. So.
You said that there's a real concern that shifting to a green economy is going to have a big impact on people who are in industries that aren't green. We've got something similar in the United Kingdom, in Scotland specifically, with the amount of oil and gas. But there was one. I don't know how scientific the survey was, but they interviewed people in the oil and gas industry, and 81% of them said that they would be happy to retrain in green technology. So we think that's quite positive. But the comment I wanted to make was that when we moved from very dirty coal in the late 80s into the 90s, there was huge swathes of the country who were just left alone and left desolate. And obviously Thatcher assumed, that's if she cared, she assumed that the market would step in and would retrain all these people and would repair all those communities. And if you visit the Central Belt in Scotland, you can see that that never took place. So when we're talking about green fiscal policy, is that something that they're considering in the States, is how to do this and not leaving it to the market?
Right. Well, and that's the fiscal part of this, is getting the money out. Right. A lot of the climate change will happen through regulatory changes, say gas prices, need to be up to try to curb use. And there might be, ways to encourage industries that are in renewables. And yet it is very clear, and even within the climate change space in Europe, I mean, when you start moving and you don't think about the impacts that are borne disproportionately by not just workers in those industries, but the gas tax is a good example. I mean, you can't shift the way you get to work and you get around on a dime. And, it hurts lower wage workers, lower income workers. And so, you know, we know what we need to do, but as you pointed out, we don't have a lot of practice. The government doesn't in these moments of transition. And it's tough because, yes, we know from some past attempts that the markets don't, like, they'll make the transition, but they're going, I mean, companies are about profits, right? And their own survival as companies. They need to take care of their workers, but they don't need to take care of the workers that they don't have, that got let go. Right. So the responsibility, the government is there. They can support these workers that are displaced. They can support communities that are displaced. Unfortunately, the track record of retraining programs is not good, right? Like, there were assistance programs for people displaced from trade. They fell far short. They weren't well organized. So the area that's referred to in the United States as workforce development, which, has a long past, it's not universally a good, effective past. We got to figure that out, and much of that is partnerships between, the community colleges, the training centers, the workers themselves, the businesses, right? Like, it has to be a collaborative effort. The government can lead and convene and have metrics and goals, but that idea that we're just going to let the market figure it out will, I mean, it will eventually, but it's going to leave a lot of destruction in its path, and that is that feeds into the political problems
Hmm.
that we have
My
now.
understanding is that America is really behind with its infrastructure. Actually, your civil service needs to grow quite a bit. You know what I'm talking about? Actually employing the government, employing people to build these bridges and build these railways, and getting your infrastructure back up to the 21st century, which I hear and read it's not at.
There's a couple things with infrastructure in the United States. One is it's a big country, right? And so just the upkeep of bridges and roads, let alone building new kinds of transit that would be more energy efficient, or, less of a negative impact on the climate. So you just have a lot of upkeep you have to do. The state and local governments have funding from Congress. That's part of why the infrastructure bill, like, some of it was already funding that was set aside to go to state and local governments. They are given a lot of discretion about what it is they need to build, what they need to repair, and what they need to build. The other thing that's happened in the United States, which in some ways is related to these layers of government, is it has gotten really expensive to build, right? So, and you've had a lot of headlines, big infrastructure projects in, say, the Boston area, New York City, that just, like, take forever and cost an immense amount of money. This is where it gets, like, we know what the problem is, but because it has levels, there are layers of government. So permitting can take a long time, getting the approval. It runs into some of the environmental concerns. Like, where can you build? And then you have a lot of property owners who will fight pretty hard to make sure that a new bridge or train doesn't go through their backyard. So we're in some ways, the United States has developed, and we have all these, the networks, the transportation, but in some ways we're a victim of our own success, in that you get to a certain point where it's not like China, where we can build a road in a matter of weeks, right? Because there's a lot of roadblocks, and each of those adds to the cost. And so then if you cap something at, say, oh, we're only going to do $1 trillion, that goes really fast, right? And so it's hard to do these big transit programs, and it really does start to run into some of the climate agenda. Like, we need to not just build infrastructure, we need to build it in a way that moves us towards being a more green energy country, and we have a long way to go with that.
Yeah, I wonder what your position is on. Are you able to achieve climate targets with any kind of 4, 5, 6% growth? And this idea of, can we really have green growth when America is going to need 500 billion tons of concrete to create its infrastructure for a green economy?
We have big problems, they're tough to solve. I think, actually, going back to what you were talking about with the monetary policy that you all are facing in Scotland, that when you have a long-term goal, you have a transition, right? And so you have to know where you're trying to get. Along the way, you're going to have to make some decisions that don't always put the long-term goal first. Like, you're working towards it. I guess, to make it concrete, an example with climate change is during the recession and early in the recovery, there was a lot of discussion as to whether the Federal Reserve, which had a lending facility that Congress had put in place to medium-sized businesses, and there were calls from some members of Congress. This was not in the legislation, but there were calls from some members of Congress that the Federal Reserve not lend to businesses in the traditional energy sector because this issue of climate change. And while I understand that argument, and I do believe that we need green fiscal policy and we have to move the needle in the United States on our emissions, in a recession, in a crisis, I mean, these businesses employ workers. They're often central in communities. So to me, that was not the time, because there's no transition, right? Like, you're talking about in the midst of a crisis. And so, yes, we need to talk about this, but we have to be reasonable about the timeline. And in the United States, this, because we do not have everyone on board with that long-term goal, if we move too fast and it hurts too many people, a new administration, a new Congress can come in and they can roll it back, and we can end up, two steps back. And that, you can't do that. So there is a balancing, and it's tough. And we have not, I mean, frankly, the United States has not made a lot of progress.
Leah, thank you so much for joining us. It's been absolutely fascinating, and enjoy the rest of your day. Thanks again, and
Yes,
thanks for
thank
joining
you.
us on Scotonomics.
All right. Thank you.
Thanks, Claudia. Thank you so much.
Well, I hope you enjoyed that, and I just kind of want to say, how lucky are we that we were able to get some time with amazing economists like that. The insight that she has, not just into the Fed, but the American economy, I thought it was just absolutely fantastic. Oh, Kairin, I'll just bring you on screen. There you are. Hello. What did you think of Claudia?
Well, I thought that was an interview that was just incredibly rich. There was so much in that. I think probably one of the most important points for me, and again, this was something that I picked up from another central banker as well, is her alarm when climate change got pointed at the Fed. And there's only so much that the central bank can do. And it's as if Congress, and I would say the Westminster government here as well, are just absolving themselves of fiscal responsibility. And it was Paul Tucker, who used to work at the Bank of England, who commented this on an interview I heard him do on a podcast. And these people that are working at the central banks. They are not democratically elected. I just wanted to really again reiterate that we want the people that we democratically elect to take responsibility for decisions, and these people at the central bank are there to help them make those decisions.
Yeah, that's a really important point. What I really liked was Claudia kept coming back to this connection between fiscal policy and your currency and your central bank. And I think that's something that we miss, not just within the independence movement, but within British politics, is that money and how you spend it and how you control it and who issues it and who uses it, it that has a direct relationship to what money you can spend into your economy and what you can do with that money. And I would say, I don't know how you felt, but Claudia definitely seemed someone who probably a little bit further to the right than you or I, and maybe a little bit more neoliberal than you and I. And I think it was brilliant to have her views. And I can see there's been some of her comments kind of resonated with the audience, this idea of there being a transition period and taking things slowly. And that's certainly something that I think is echoing through the Scottish Government at the moment. Would you agree? She seemed to be much more, take your time. If you've got a goal in mind, you'll get there. Is that the impression you got from her?
Yeah, and I think she comes from she's thinking from a space of yeah, planning, absolutely. The other thing that I brought up with her as well was that maintenance of infrastructure, and the expense of the building industry that she brought up as well. And that was something that I heard a builder who was interviewed by David McWilliams talking about as well, that this is to a certain extent it seems like the building trade has almost become rarefied. Whereas I think, when I was a child, the council employed lots and lots of builders to do lots of things. And I think perhaps because it's moved into a private space, it's become too small, actually. And to me, it seems to need government funding. There needs to be a government option there, to ensure that your infrastructure is in place. I mean, what I have read about the US is that there are bridges that you could not go over safely.
Yeah, yeah, it'd be interesting to hear from anyone who's either from the States or has been to the States to get an idea of their infrastructure. I have, and I can testify to maybe not bridges that I've been scared to go across, but bridges that look like I should be scared to go across. But the real network, doesn't really exist. It was always private enterprises. It was never connected when it was built. So yeah, some really fascinating stuff. You mentioned David McWilliams, and I remember listening to one of his podcasts, and he was talking about the NIMBYs not in my backyard, and he said what he thinks society has turned into now. They're turned into bananas, and that's build absolutely nothing anywhere near anyone. And that really resonated with me when I was thinking about that when I was listening to Claudia. It is just that idea that infrastructure, and you can even look at houses. If people are building houses, that has an impact on you as a homeowner, because it's potentially going to increase the supply of homes, which will reduce the value of your home. And it's the same with infrastructure. It's a really kind of selfish perspective that a lot of people can have, and she certainly said that was one issue. I thought it was interesting when she was talking about the communities that are affected by change, and ostensibly the communities that will be affected by climate change. And she was still confident that the market, I think she said, the market will eventually fix those things. What do you think about that? Do you think the market will eventually fix the climate crisis? Sorry, I know that's a loaded question and it's a bit unfair to me to ask you. What do you reckon?
Oh, well, of course, I'm in a complete disagreement with that. I think it's got to happen with government money, and it's got to happen fast. And governments all over the world have to see this as being on a war footing. And the spending that we've done on the pandemic demonstrates that governments can treat the climate crisis as a war, the way that they did the Second World War, when they did massive deficit spending there as well.
Well, apparently, globally, we've spent 11 trillion on payments to cover the population during the COVID crisis. 11 trillion. So imagine what 11 trillion would do in terms of green infrastructure across the globe. And when we interviewed Fidel Kabud today for an episode, an amazing episode, which you've got to tune in for on, I think it's the 2nd of November, I think. I'll certainly put a link into it. He was talking about these huge figures. He was saying that, really the global north has to put back to the global south 2 to 3 trillion a year. And I was thinking, that's just an insane amount. And then a couple of hours later, I heard that it was 11 trillion that we'd spent in 2 years on kind of COVID. Not just a COVID recovery, but it's helping us cope with COVID. So these figures seem absolutely huge, but they're not really in the global scheme of what we have to do for the climate crisis.
I think she brought up another really important point as well, which is, you can spend $1 trillion well, or you can spend it badly. And I think that's really key. Again, this is something that I go on about, is getting people to think about real resources, and that the currency is something that directs the real resources. And, you can't, you're building your bridges with labor, and you pay people to eat, drink and shelter, and perhaps have some spare time to do some nice things as well with the money that you pay them to labour and build your bridges. And this kind of mobilisation of the workforce really has to happen fast. And unfortunately, in the UK now, we have an incredibly right-wing libertarian government. The other thing that I picked up on today as well that I wanted to point out is that the Catholic Church have divested from fossil fuels today. So the other thing that Claudia brought up was the divestment from the fossil fuel industries by the central bank and by banks. And, she's obviously concerned about that happening too quickly and how that will affect the workforce. But, I would argue that the government is in a position to cradle the workforce. Absolutely.
Yeah, I agree as well. I think when we're looking at transitions over years, away from fossil fuels into cleaner, greener technology, we've got to be looking at months for that to be actually have an impact. And the market is not going to be able to get in there and solve those problems. It's something that we've got to support our governments to do. And as I said at the start, fingers crossed, and I'm sure most people would agree that Scotland as an independent country certainly seems to be likely to be much greener and cleaner than the UK government at the moment, and for the foreseeable future. A lovely comment from Peter Smith, who said, yep, he was in NYC to New Orleans 2 years ago, and the roads for the entire trip were a mess. Rubber tire debris all over the roads and verges. And I think that's just a perfect example of no one spending any money. I'm just watching something on Netflix at the moment about chemical plants, and all the research and all the collecting of samples has been done by the community, because the Environment Protection Agency is just so understaffed that they haven't got anything. And also there's a huge element of self-regulation, and I think we should definitely do a SCOTONOMICS on this idea of self-regulation being the way for us to look at an independent Scotland. Because again, if we grandfather what's already happening in Westminster, as suggested by the Sustainable Growth Commission, this is where we would start, by taking on all this idea of self-regulation in some of these really important industries. Well, thanks everyone for joining us tonight. We'll see you next week. Episode 13 is absolutely fantastic. Part of our road to COP26. It's an interview with Ben Franta, who you might have seen in the news just last week, because he's written a paper about French oil companies and how they knew about the climate crisis from the 70s. And this just comes on the back of the one he wrote about American oil companies. And we've got this incredible person, one of the go-to people to speak to about the fossil fuel industry, its climate and its denial. And he's speaking next week, and he's covering quite a bit on the Scottish perspective of oil and gas. And we even get him to mention Ian Wood a couple of times. So that's how specific we've got with a kind of leading global expert on denial and delay from the fossil fuel industry. So hopefully we'll see you next week. Thanks everyone. Bye for now.
Bye-bye.